All right, we are back, and the Federal Reserve is underway with its December meeting. It started today, and, what can we expect when the interest rate decision is announced tomorrow afternoon? Let's bring in Doug Flynn now on this from Flynn Zito Capital Management. Doug, there you go. Hey, it never used to be this exciting, but Trump has made it such with Federal Reserve meetings, and now you got some tension on the committee. Jay Powell on his way out, maybe Kevin Hassett on his way in. We don't know for sure. But tomorrow, you expect him to cut a quarter point in the key rate and then say, what about the future? What are you looking for?
Yeah, the markets are definitely calling for that. It's almost a 90% expectation that they will cut. This is with the information, the delayed September report that we had because of the shutdown. There was no October report. The November report for jobs doesn't come out until next week, so they don't have that information. And so the expectation is we'll cut, and then we're kind of turning our sights to the January meeting. And part of this you're going to see when they speak is the language in whether or not they're going to raise the bar for how difficult it's going to be to lower them any further for next time. I think they're setting the stage for that, and that's the language that everybody's going to be looking for, I think, when we hear him speak tomorrow.
But the division on the Fed, does that mean anything to you? I know maybe it makes it more intriguing or more interesting, but what about in terms of how you follow it for the impact on the economy and markets?
They're split, and you don't often get as much of a split in terms of how many people want to cut and how many people don't. And the thing we have to remember is that even though Powell will sort of step down from being chairman in May, he's there for 3 meetings in 2026 before he's no longer the chairman. But then he's still on the committee until January of 2028. So he could be a thorn in the side if he wanted to keep things, sort of from going lower, even if they put Hassett or somebody else on there. But the whole thing is, it is a committee. It isn't just Powell. It isn't just Hassett. It isn't just one person. You kind of have to convince people to go along with what you're thinking as the chairman, and sometimes you don't do that. And right now, not everybody's on board with the cut. I still think we'll get it, but it becomes curious what's going to happen in January and the first couple meetings of next year.
All right, let me shift to kind of the wider discussion about the economy. It's interesting, as you know, President Trump is on the road today taking his economic message to Pennsylvania. We're going to be there live in just a moment. Talk to Congressman Dan Muser, who supports the president, of course, a Republican from that state. I was talking to Mick Mulvaney earlier this hour about it, and, he was talking about, like, hey, what's the president's message going to be? And he was actually hoping to hear something about deregulation from the president. Now, why do I bring that up? Let me look at this article from Politico that quotes a Democratic SEC commissioner who's on the way out, by the way, saying that I worry people are going to get hurt in the short term. I certainly wouldn't be alone in making the analogy, but the trend towards deregulation in this current environment to the period prior to the stock market crash in 1929. I know there's a big new book out about that, but also people talked a lot about deregulation in the run-up to 2008 and 2009, in the Clinton years and the Bush years, and then there goes the market. So what would you say about that? It's usually, for economic folks, they see it as a positive. All right, let's cut the red tape and that kind of thing. Is there risk?
Well, when you do decrease regulation, you do increase risk to a certain extent. But I mean, to parallel this to 1929 is a bit ridiculous. There were a lot of things that happened in the 1920s, that is, such as you could borrow against your stocks 10 or 20-fold. Now you can only do that 2 times as much, so that there's much lower issues there. Also, she's discounting the fact that the Fed is the reason we got catapulted into the Great Depression, because once you're in a recession, if Economics 101 is you need to lower rates. They did the exact opposite. They raised rates up a lot, and then they held them way too long. So it was Fed-induced. So, the fact that you're decreasing regulation from probably over-regulation, while it does increase the risk when you deregulate, I still think you got a lot of room before you get between now and 1929. And the Dow was down 89%. I mean, okay, we could have a 10 or 20% correction. That doesn't mean we're going to an 89% Great Depression type of a correction, so I think this is a little bit overdone, if you ask me.
Or maybe a little bit more than a little bit over the top. But do you think that would be a good move, though, from Trump? You talk about tax policy, because it's not really cutting taxes when you extend rates that are already in place, which is basically what's happening next year. So I don't know what the effect of that be. Maybe it won't be bad, because if you believe in lower taxes as being a stimulant for the economy, because at least they won't be going up. But maybe cutting deregulations would help. Is that what you're arguing?
So, I mean, cutting taxes certainly will help the people cover some of the inflation that's been hanging on. But cutting deregulation, what it does, especially for smaller companies, is it gives them more opportunity to grow, and that's what I think he wants from the economy side. That's the point of that for cutting deregulation. You can cut it too far, but I think we're a long way from just the regulation in this industry is beyond ridiculous. I think we get away with a little bit less and still do really well and still protect the consumers quite well. That's the way I see it.
Let me run now. We'll see if he talks about it tonight. Doug, thank you, because it's 4 p.m. Eastern.